Well, we've seen a little bit of a setback in the September month. If you recall, back in August, we saw a positive response to the RBA's August rate cut that carried sentiment to just 1.5 points below the 100 neutral level. So within cooey of an outright optimistic result for the first time since early 2022. Fortunately, September, we've retraced some of that gain. Sentiment overall down 3.1%, and the month back to around 94.4. That's cautiously pessimistic territory. So we've returned to those levels, although we're still up on a couple of months ago, and the picture is still of a recovery. And really the detail was actually a little bit more positive than that headline decline suggests. Consumers are continuing to report a gradual improvement in their family finances, and they're actually quite bullish on the outlook for family finances over the next 12 months. Where they've given back some ground is around expectations for the economy. And even there, it's quite an interesting piece. Additional questions around news recall, for example, strongly indicate that the cost of living issues that have dominated over the last few years have continued to move into the rear vision. The concern instead seems to be around some recent data around inflation and the consumer spending picture that may be casting some doubt on whether the RBA continues to deliver interest rate cuts. Now, for the record, consumers do mostly expect rates to be unchanged or lower over the next 12 months. There's just a lower degree of conviction around that. Other changes in the survey were relatively small, where consumers were a little bit less confident about the outlook for jobs, a little bit more pessimistic around whether it's a good time to buy a dwelling, a little bit more positive on the house price outlook, which risen to a 15-year high on that front. And they were a little less risk averse. So really a sort of mixture of moves in the detail, and all of these kind of small in the scheme of things. The subgroup breakdown is probably worth a mention, I think. When we look at we track sentiment across 50 or 60 different subgroups within the survey. And that does show some bunching. So at the top end, we're getting very strong positive reads out of some groups. Younger Australians, ALP voters, they're in the 110s when it comes to their consumer sentiment reads. Then there's a second grouping, higher income groups, managers, professionals, those living in New South Wales and Victoria. They're sort of more bunched around the 100 level, so sort of roughly neutral. And then there's this long tail that's still quite downbeat, with reads in the high 80s to low 90s, retirees, tradies, people living in mining states, and a whole bunch of others. And that may be a little bit why, one reason why we're getting some of these mixed signals around the consumer at the moment. On the one hand, they seem to be spending freely at times. Other aspects suggest they're still going very slowly. It suggests that we may be seeing a 3-speed consumer recovery that's coming through at the moment, and that may be why we're getting some of these mixed messages. All up, it's still a consumer recovery coming through. We're back at cautiously pessimistic territory, but we're well up on a year ago. So that story of a gradual recovery that's slowly still coming through. And I think that points to some positivity down the track. Dare I say it, we're 111 days from Christmas, and we're maybe still close to getting that outright positive response on sentiment that would tell us we're in for a decent festive season for retail spending. It does look like it might need another nudge from interest rates. And on that front, it looks like early November is really the earliest window for the RBA moving again on rates. So fortunately, we didn't get that move back to outright optimism that we haven't seen since early 2022. But the developments are still net reasonably positive in terms of the cost of living issues are moving into the background. And there are some genuine improvements, sustained improvements happening around family finances. We may just need a little bit more of a nudge before that mood actually moves to something outright positive.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.